Hello and welcome to this week's video blog at MonsterMortgage.ca. I'm Roy Cocciollo, host of CP24 Hot Property, and today we're going to talk about the new mortgage rules and how to manage your expectations when applying the mortgage, whether either it's with a mortgage professional at your bank. Now, a couple of things have changed recently since January of this year with new mortgage rules. Banks have actually gone back in time. The past few years, since 1999, most banks have done what we call risk-based lending. Now, risk-based lending is a little bit different than today's credit-based lending, which they're starting to do now. And basically, for the past 13 or 14 years, we dealt with something called the 4 C's of credit, which is credit, which is your credit score. So you got to make sure that your credit is above 620 now. Banks are taking more and more a closer look at your credit to make sure that you can actually have a good credit rating and move forward from that. Second is capacity, which means the amount of credit that you actually carry. So you have to be very careful in the sense that if you carry a lot of debt, that may hinder your ability to actually qualify for a mortgage. Then once it's capability, which is basically what you qualify for with your income. So you want to make sure you have the capability of paying that loan back. And also cash, which is basically your down payment or your equity in your home. In the past few years, we've been looking at risk-based lending. So if you had two out of these 4 C's in your application form, chances are that banks are going to give you a mortgage at the best possible rates. Now they're moving away from that and going into more credit-based lending, which means you'll need at least 3 out of 4 of these categories in good standing in order for you to qualify for what we call your A-type lending institutions. But most likely you'll need all of them in order to get the best rate. Sometimes you can get an exception done, but we're seeing those less and less now. So you got to make sure you prepare with making sure your credit score is above 620, that your debt ratios are well within line, that your income will allow you to qualify for what you are applying for, and make sure the down payment matches what you're looking to do. Now, if this doesn't happen, you can't actually apply for it. It doesn't mean you cannot get a mortgage. You're just going to do what you call your non-traditional lenders like home trust, equitable trust. They're more about your down payment and more about your capacity. More about your capability of how you can pay back that loan. So what you have to be prepared for the next little while is a couple of things. Be prepared to apply more paperwork and documentations regarding your employment, regarding your credit history, regarding your repayment history as well on all your lending institutions. Second, you got to be prepared if you do have bruised credit and you want the best possible rate, you got either a co-signer or a guarantor to help you out with that. Be prepared for lower property values. So if you're looking for a refinance, in the past couple of years, they've been very liberal with the values. Now you see they're going to be tightening those up, so you got to make sure you're really very realistic on what you can look at of the value of your home. Also, just because you have a big down payment doesn't necessarily mean you're going to get the best possible rate. And also you got to make sure is that your past payment history, your existing lending institution, may or may not get you a mortgage, whether it's going to be a renewal or if you're looking to refinance, get more money out. So these are the things you have to really be careful of over the next little while, the new mortgage rules. I'm Roy Cocciollo of Monster Mortgage. If you have any questions, please don't hesitate to give me a call at 416-544-5114. I'll be happy to answer any questions you have. Thanks for watching, and we'll see you next time.